All right, good morning, everybody, and happy Thursday. Where's the camera? There's the camera. I'm back in my main office, so everything's a bit different here. Happy Halloween. I love Halloween. I just got off a long airplane flight, a little jet lagged, but ready for a good final day for October, and gosh, do we have some important stuff to cover. So if you guys give me just another minute, I'm going to quickly take some notes. Again, I'm just literally straight off the airplane, like literally. So slept 6 hours on the plane. I think that's pretty good. So today is, and we'll get started in just a minute. Alrighty, let's button this up. Looks a bit too gigolo. Then we've got this. Look at this chart, guys. But before we get started, this is German yields. I don't know, Serge, I don't give a freaking nothing about German Bund yields. Why do I care? I'll tell you why you should care in just a second. Can you guys hear me okay, by the way? Just quickly checking. Fully caffeinated. And welcome, everybody. If you're here for the first time, this is our morning show. I should get closer to this microphone. We do this Monday through Thursday. Today, of course, being Thursday. Again, happy Halloween, everybody. Let's get started. Here's the thing. So, yeah, well, we can look at silver, we can look at the metals, but let's look at this, guys. So this is really, really important. So I just got touchdown this morning here in Europe, and the inflation data, this is important, right? So you know we've been talking about this higher inflation for longer theme. Let me move this over a little bit. So the higher inflation for longer theme is crucial because we see it even in Europe had better inflation this morning or higher inflation than thought. And of course, in the U.S., we have a reacceleration in inflation, and this really matters to tech stocks, right? Because that's what I get to, because I know everyone only talks about tech stocks, but it's going to matter to your tech stocks too at some point. Of course, the question is when. So remember how we talked about 10-year yields, and these are the top three things of this morning. We talked about yields, then we're going to talk about tech stocks and tech stocks, right? So the important thing about yields is that they're going the complete opposite that the Fed is sort of saying they will go, right? So this is German yields. They are 10-year yields. They've gone from 2% to 2.4, right? Of course, you may not care, but I will tell you, you're going to need to care about this because it plays into trades in your U.S. stock portfolios, right, if that's what you trade, and in anything else pretty much. So we've gone from 2% to 2.4% while the ECB is cutting rates. ECB is European Central Bank. Let's go back stateside, okay? So U.S. 10-year yields, we've talked about this pretty much all week. Oh, that's the wrong ticker. Search. Type it in properly. Here. How about U.S. 10-year yields? The Fed cut rates on the 18th of September, right? That's down there. 10-year yields are straight up, like couldn't be any more straight, 70 basis points. So I was driving to the airport yesterday in Miami, and the guy was asking me about what do I think the Fed is going to do next week because he wants a lower mortgage on his house, and I had to tell him that the Fed doesn't control the 30-year mortgage market, it controls the overnight lending rates. I think a bit too much for him to digest, but it's great that he's following that stuff. So this is inflation at work, right? This is what's going on, which is why gold, one of the reasons why gold's up another, this is yesterday. Gold futures up this morning, or down a touch, right? But we're like, even just this week, gold, and gold can correct at some point, and it will correct at some point. There's no doubt about that. But week to date, gold is up another, what is this here? Another 1%. Right, so the gold futures are now, I think they want to go to 3,000 is my view, but I don't know if we get a correction before then, right? So we're getting into, I think, pretty thin air here at this point. So this is inflation at work, guys. That's what I keep talking about. We have to own things like gold, things like uranium, things like the energy stocks, right? They haven't really done a heck of a lot year to date. I've underperformed. They are going to start working at some point. And then Keith is talking about CCL, which of course is Carnival. And we talked about this as a small little trade the other day. That's nice to know. Again, not a big thing, but it's a nice little trade. So that's good, right? That's nice. Let me check one more thing here before I continue. I have to quickly check the audio here on one thing, but we should be good. Circle here. Yeah, okay. Good. All right, so that's the inflation story, right? The inflation story continues to work. Things that we want to own because of inflation continue to go up. I mean, it's also honestly one of the reasons why I think Bitcoin is doing what it's doing. Today's a very important day for Bitcoin. So let's talk about this. Is point number 2, and then I guess we'll do 2 points on tech because there's a lot of tech movements this morning. All right, so this is Bitcoin. Remember I talked about yesterday that this is a very, very important, forget the week, today is a very important day for Bitcoin because if we have a monthly close at above previous all-time highs, or at least marginally so, I would imagine that the animal spirits could come alive in the remainder of this year. Now, of course, we got the election, and that's going to cause something about it. But so this is really important now. So this is a monthly chart. So watch this very closely. Look at your IBIT ETF as well if you own that. I know a lot of people prefer to own this stuff, if at all, through an ETF. It just makes it a bit easier for some people, and I get that, of course. But this is really important. So if Bitcoin can close at a fresh all-time high on a monthly closing base, today being the last trading day for the month, I really think we could go to 100,000. But again, this stuff's real volatile, so just be a little bit careful in that, okay? So that's inflation. I want to own things that benefit from inflation. That's hard assets, right? That's companies that produce a lot of cash flow. And it's less so, and here's point number 3, and that's less so long duration tech stocks. There's a lot of people who I consider to be technologists who don't understand the macroeconomic impact of a long duration asset. They see the growth story in something like Microsoft, in something like whatever, all the Mac 7s and others. And I fully agree with those stories. I see it every day. It's unbelievable, right? But they don't understand that as an investment manager, you have to take the higher discount rate into account. And so there will be some underperformance, not bad performance. I'm not talking about huge negative returns, but I think there's going to be some underperformance going forward if inflation reaccelerates, which it is now slowly starting to happen. So let's talk about Microsoft. Let's talk about the others. I know it's the only thing anyone ever talks about, which it's risky, right? Because these things can correct. And so when I was scanning some of the markets this morning on the way back to the office on this side of the Atlantic in another Uber, and we'll talk about Uber stock as well, by the way. I was scanning through some of the message boards and things that we have internally. You can tell that people freak out on a stock being down 4%. Guys, if a stock can't drop 4%, we no longer have functioning markets. We already no longer really have functioning equity markets because everything's focusing on a few stocks. That's a big problem. It really is a big problem. And and that's another thing. So again, a lot of guys that I really respect, technologists, they don't understand the crowding of positions, right? So every single person that I know and every single fund that I know is dramatically, not a little bit, but dramatically overweight something like Microsoft. A little hiccup, and a temporary hiccup, can then lead to what otherwise would be a 5 to 10% correction to a quick 30. And at 30, most people panic, right? And this is the problem that I continue to see. It's not that I don't believe in these stories. I see it, I get it, it's all there. But I actually think energy is probably a safer way right now to play this, because guess what? All these companies, and we've seen it over the past few weeks, they're all investing in nuclear energy, right? They have to create their own nuclear energy because the demand is so huge. So you saw Amazon announce that. You saw Microsoft announce that. You saw Google announce that. They're all doing it. They have to do it because the infrastructure hasn't been built well enough for all the crazy demand from, we talked about it for the past number of years, that crypto takes a lot of energy. Well, guess what AI does, right? It's like extraordinary. And then if on top of that, everything else is electric. Just look around your desk or around your hand. Everything now everything's charges somewhere. Whether it's a car that I drove here in an electric Tesla, so a Tesla in Uber, and I've got everything here. Everything's electric. Literally every single thing except possibly my door handle is electric here, right? So that's the thing, and that's the direction we're moving. So that requires a lot of energy. So let's talk about Microsoft quickly, and let's talk about Google. So Microsoft and Uber, excuse me. So Microsoft this morning is down 4%, and some people are freaking out, and that is laughable, guys. I cannot tell you how laughable that is. If a stock is not allowed to move 4, 10, 15, 20%, then we have broken markets, and I think we are at this point. And it's because everyone's overly crowded in these things. So this morning, Microsoft looked like it's going to open around 415. That's basically the lower end of the trading range. And so there's going to be people in here now. They're going to go, okay, yeah, this has now broken this wedge, right? And I would agree, actually. That might be the case. The question, of course, is if it's allowed to continue. So I personally wouldn't be going out there and shorting Microsoft. I would wait until we get past the election and see how the market reacts. But this morning, right now, if Microsoft opens and stays and closes on the day below, let's call it 420, which is more or less where it's about to open this morning. So if it closes plenty below there, particularly below 410, we can talk about this being a bit weakness. Right now, this is nothing but noise. It's just a normal reaction. And then, of course, you have Uber, which I've used 4 Ubers in the past 24, or 4 Ubers the past, 24 hours at this point. And so Uber this morning, which I actually really enjoy. I think that they could be creating an Uber, no pun intended. They could be creating an Uber app, right? So that a lot of stuff that we do gets done through the Uber app. If you open up Uber app, you can do most anything nowadays with it. It's crazy what you can do. And, financial services might be an extension to that at some point. It would be my guess. We shall see. But the stock this morning pre-market is looking like it's going to be opening up about 7% lower, so around 73 and change. So on the charts, that's basically here. And so this is noise, right? So that's what that's my point this morning. So I don't see this as a reason to freak out. The stock is just reverting to where it was a few weeks ago. That's all it's doing, right? And so at this point, I really would not do much. I'm not sure this is a buying opportunity, but I also don't think it's a shorting opportunity. Let's get past next week. The more actionable thing that for me and for us is the inflation story, right? We want to own, and there will be some, again, tech is not a short when inflation is higher. It's just likely going to underperform other things, like, for example, hard assets, right? So particularly the things like metals, right? Particularly things like that are more on the infrastructure side, stuff, right? Stuff that kind of hurts when you drop it on, like wood, maybe, right? Again, it's a very long list of things, but all those things are baskets of things that we want to own. I will quickly just finish off with the uranium chart, URA. This is just one of them, but these are just, if you talk about charts, these are beautiful charts. They are really just starting to get going, and if you look at these through a longer lens, it's really just getting going. And again, if you look at inflation this morning, in the U.S., you look at inflation this morning. The PCE came out this morning, which is the Fed's favorite inflation gauge, right? Came in, in line, but then again, those numbers you can't always trust them. But either way, they wasn't like falling apart. So I things like these uraniums and this is an ETF, or Cameco is a particular stock. I think it's CCJ. Yeah, Cameco is a stock within that space. If you need to go chase a stock on that this is one of them that makes sense to us at least. You look at lithium, we talked about palladium, and these are all ETFs, by the way, right? And again, you can go out there and dig out individual stocks. It just then you're adding a lot of idiosyncratic risk to it if one does that. So I'm not sure that's necessarily necessary, right? So that's it. We're at the 15-minute mark. We did it. Do you guys have any questions here before we continue? And Jeanette, thanks for the note. I saw you're somewhere in here as well. Awesome. We are going to be continuing with our Trender series. This morning we're going to talk about how to use momentum with options and futures. So make sure you join us for that. If you joined us yesterday and the day before in our sort of education sessions this week on momentum. And please make sure you give us a thumbs up, like, and you subscribe, because it allows you to get in real time updated when we do these live sessions, when we have new podcast recordings, and anything else we do here on YouTube. With that, happy Halloween. We made it. We're just about through October. Tomorrow we go into November, and when we come back on Monday, we will be in election week, and there's going to be plenty of stuff to talk about. So thank you for joining. Have a great Halloween. Happy Halloween. We'll see you guys on Monday. Thanks for being here. Thumbs up, like, and subscribe. See you soon.